Welcome to our investment update. And in these unusual times, I'm very sorry we're not doing this in person and doing this by video. And I have to say, I look forward to the time where we are back in these normal periods and we can catch up and do this live. Since our last get together, it's important to go through the performance update, as a lot's happened since the COVID-19 virus has impacted both the economy and the markets since the new year. Interest rates around the world are falling and will be going close to zero as central banks fight this slowing economy. Furthermore, we'll be seeing large fiscal stimulus enacted around the world, including Australia, to help people, health systems and businesses as they react to these difficult circumstances. What's going on in the markets and in the economies today? Well, the first and foremost is stopping the virus. And stopping the virus has consequences. First, we are practicing what they call social distancing and targeting vulnerable members in terms of isolation. And hopefully a vaccine comes to the fore and the virus itself tapers off. The second thing to that is how that impacts the economy and the markets, and the rest of the presentation will be discussing that. This slide shows the allocated pension returns for the month ending February. And as you can see for the month returns, it was just the start of the COVID-19 virus. You can see also that over the longer term, the performance has been very good, but really what's happened since February and also month to date to March. And I'd like to talk a little bit about that. And this looks slightly complicated, just shows the returns for the various options, but in particular also maps out the Australian market and how that's performed. The reason I wanted to put this on a slide is you can see the line that's fallen the most is the Australian equity market, and then the lines above are the various options from the higher risk options to the lower risk options, and we've used what we call the bucketing approach, which takes a third of the various options. And I think the key thing to remember here is that even in these difficult markets, you can see diversification works. Unfortunately, you're still losing returns in terms of negative returns, but you can see it's not one-for-one impact with the market. And this is the key thing, that the lower risk options are actually operating much better in these difficult markets than, say, the higher risk options, which are appropriate for those who are younger. How unusual are the times that we're currently going through? And as you can see, they are very unusual. And the recent market volatility, and I've used here the US stock market, we are seeing daily moves that are up there with anything in history and matching that of the global financial crisis. And so we are living in an era of much higher volatility. And in that era of much higher volatility, investor emotions can get ahead of themselves. And it's very important to get through these short term to manage through to your retirement needs and goals. Combating the effects of the virus, policymakers around the world have dramatically reduced interest rates. And so one of the problems, particularly for our retired members who are wanting to draw income, you are now watching interest rates fall and cash rates approaching near zero, particularly with the RBA recently cutting to 0.25. And as you can see, global interest rates around the world are fastly approaching the zero lower bound. And so savers are also being hampered in the sense that they're getting lower income. This has been done to support the economy and try to keep the markets going, but this is also difficult for those who are relying on income as well. The team is working harder than ever. It literally is a 6 a.m. to 10, 11 o'clock at night as we are going through the changing markets and changing variables in policy. The team is formally meeting every morning to discuss the impacts and implement plans, and the investment committee has moved from quarterly meetings to weekly meetings to go through the strategies and just monitor the developments in the portfolio. So whether we're working remotely or in the office, the phone calls, the conference calls are constantly happening day to day, so we are on top of the situation. We're focusing on maintaining appropriate diversification across all the options. Whether it's the lower risk options or the higher risk options, it's always important that we keep to our strategy and maintaining the overall risk and medium-term outlook. We're also not making major changes in these variable times. When markets are moving 8-9% a day, which is equivalent to their expected annual return, it's very hard and not prudent to react to this. And what we're trying to do is add a little bit of shares and credit related investment as the opportunity presents itself, but keeping the diversification of the portfolio intact. I really look forward to seeing you again in person, but importantly, we're still managing your portfolios, and if you need help or any guidance, we're here for you. Thank you.